Guys, how's it going? Welcome to another red day and another geopolitical analysis video. Don't be startled. I warned you that although the bullish sentiment will continue and we will see that materialize in actual prices, not just sentiment, I told you and I warned you about the interest rates. Okay, we had a discussion in the last few weeks, and I told you that look, I do see this as a rounding top, and that this might be the last it before the major fall. But in the meantime, until that truly materializes, these moves are going to scare investors. Interest rates indicate where the bond market thinks the actual inflation is going. Okay, we have seen a rise in oil, we've seen a rise a little bit in natural gas. um, the commodity sector is showing signs of strength. Now, this could have been just because of the holidays, because of a lot of transportation, some of the geopolitical aspects. But given the fact that the geopolitical aspects that took place in the Middle East did not really move the needle, I don't think that that's an excuse anymore. So it could have been just the demand. Now, looking at the 10-year, we touched 4.6. We're about to break through the 4.7%. It may happen, it may not happen. We have to wait and see. I thought this was going to be a little mouse bounce and then an M. This looks like it's right now moving strongly up. We could see it touch the 5% and then drop. We have to wait and see. But until we have clarity in the bond market, the stock market is sort of going to be in this limbo area. We've noticed that stocks have been rallying up in the beginning and then selling off. The selling off is by institutions, by large entities, absolutely. So if we look at the dollar sort of indicated that a drop might happen. Now, many think that the dollar moves faster than the interest rates. Some people think the opposite. In this case, what I'm seeing is that this drop over here, okay, has resulted in a bounce with an interesting tail. So there's buying pressure here. But the thing is, it's not that the US dollar is necessarily becoming stronger. What it is the actual strength of other currencies that is weakening, because we see other central banks right now are decreasing interest rates. So by doing that, the federal fund rates drop. There's more devaluation of currencies. The dollar is the strongest currency in terms of its outreach and its depth in the debt markets. So it is reasonable to see the strength. What I'm really interested in looking at is the BTC relationship with the dollar, because although the dollar was rallying, BTC was holding up pretty well. I think this is a very, very interesting pattern here. I think that we might see a bounce from this. If not, it's already quite deep. Um, I think 88,000 could be in the cards, if not lower, 84. This shouldn't scare anybody. This is an opportunity to jump in. Whenever you see long red candles like that in one of your favorite commodities or stocks, you should be happy to jump in a little bit. Having a little bit of cash on the side to do so is always very wise. Now, I want to share with you natural gas, what happened with natural gas, because some of you messaged me and were asking, okay, what's my positioning like? What's going on? So I bought at the closing of Friday, okay? Because I thought this was oversold. I told you the RSI was oversold. It was falling into strong SMA support of the 200 or the 150 day. And I said, we're going to see a bounce from here. Okay, definitely. It bounced, strong bounce, 7%, and then came back down. That's fine. We have to see what's going on. There might be a bear flag forming over here, and then we'll just collect it when it's a bit lower. Nothing bearish, nothing overly bullish. We're waiting. As you can see, this is a period where the markets have uncertainty. When the markets have uncertainty, they don't like uncertainty and they drop. They sell early, prematurely. And there could be some insider selling, of course, because they're expecting something to break. But let me give you an example of why you should be frugal, um, optimistic, and sanguine. Remain calm. Because in this situation here, I'll show you. What is this? The SPY. Okay. There was a strong move today. Okay. There was a very strong move. And I want to look at how it started. Okay. Look at the opening hours. In the opening hours, it jumped up, gapped up, then slowly started fading throughout the day. Slow but meticulous selling. Why did that happen? Okay, well, you know what? I'll give you some of the news aspects because we looked at the charts, we looked at the correlation. Over here, no, that's not really the expectation. The expectation in reality has to do with the data that was released today. We had data that was released on PMI and the jobless, the JOLTS application, I think, the jobs applications. It's showing still a strong economy, but these are previous months, okay? These are months when the hiring season was on due to the seasonality. This is not of the current month, the new year. This is the previous year. So the markets are selling off, the institutions are selling off because they're expecting the Fed to look at this and not want to cut further or not cut enough. And the anticipation of this is making the big players a little bit queasy. And let me tell you this. The VIX was a very interesting play today. I actually bought the VIX. I bought options on the VIX. I sold prematurely. I made a few bucks, but nothing crazy. I should have held because I was well in the money at some point, and I could have 10x'd my position. But 10x, it's okay. I did a bit less than that. But the reality is that all across the board, the tech sector, okay, this is not the AI sexy play, Wolf, but it's oversold. I think here, this is a great play. If you want to buy something, I think Wolf is great. TSM, we saw TSM gap up again, reaching the 122, and then it fell down. Okay, heavy selling, heavy selling. So IWM, what did I tell you with IWM? I told you that when you're going to see interest rates drop, you're going to see the WM go up. The fact that interest rates were up today, okay? Sure, they've been dropping a little bit here on the 15-minute, but the reality is that the Russell 2 sold off, okay? Sure, it sold off, but the fact that it's still holding on here and not collapsing down, this is a sign of strength. This is a sign of strength because the Russell is catching up, and everything that you've seen NASDAQ and the SPY do, the Russell is going to do. That's all I got for you guys. Be optimistic, buy the dip, and just be calm. Be calm because that's when you want to buy, when things are moving lower and not when they're moving much higher, okay? Of course, catching a falling knife is dangerous, but when you put all the pieces together, you realize that this is not the crash that everybody's talking about and that the bulls are still on. We still have a long way ahead of us. Thanks so much for watching. Please like and subscribe and comment. I'll see you guys soon. Thank you.